Good morning. It is another morning with a lot of earnings reports, and some big ones came out today. And the biggest one being TSMC, the big foundry for semiconductors, announced their earnings. And man, did they overachieve their number. Their revenue went up substantially, profits are expanding. And I take a look at TSM this morning with you. The good news for TSM, which is a massive cap company, they were nearing $900 billion in market cap. Well, now the stock is up about 9% last time I checked. They're going to be looking at becoming the next trillion-dollar company. Incredible, incredible. And this is going to send semiconductor stocks flying high this morning. The semiconductor space was dealt a little bit of bad news with ASML reporting that their forecast is actually really looking poor. This report from TSM shows that the next year looks pretty prosperous for the largest foundry in the world. And I'm not going to get into their report just yet. I'll share that with you in a few minutes. The other news came out of Elevance, and they had a very poor earnings release, and that stock is crashing a bit. So I'm going to take a look at Elevance, which is a big healthcare insurance payer. We'll take a look at that and see where that's going. If you recall earlier this week, United Healthcare, the biggest health insurer in the country, announced earlier this week, and their stock really went down. The cost of providing health insurance is going up for these companies, and it's squeezing their profits. So we'll take a look at that. And there's other stocks. There's probably going to be too many stocks to cover this morning. So I'm going to try to cover the big highlights. Also look at member requests. And if there's members out there and you want to look at a stock, please let me know. I'll try to look at it and try to squeeze it into this live stream. So good morning, Shadow Guy. Great to see you. Hopefully you are having a nice Thursday morning. Android PC gameplay. What's up, man? Very nice for you to join. I really appreciate it. You are a regular. All right, so let's get into a couple of things before I start into stocks. I'm going to try to keep to this schedule Monday through Friday. You are on the AM stream, and I'm going to try to stream each morning. I'm also going to try to stream in the evenings on Tuesdays, Wednesdays, and Thursdays. Now, as I hope you will understand, from time to time, I will have to miss one of these streams. Life happens, and I'm a one-man operation. And I apologize for anybody that wanted to go to the PM stream yesterday. I didn't make it. Life happened. I needed to tend to something for my family, and went and did so. So from time to time, I apologize in advance. I will have to miss a stream here or there, but this is the general schedule that I'm going to try to keep, and hopefully you can join me as often as you would like. Additionally, you could join the community on Discord. It's been really active and excellent. Like, I literally wake up, and one of the few things that I do just to kind of get going is check the Discord, see what's going on, and start chatting with some of the investors that I've gotten to know. I encourage you to join. Just be very careful on Discord. There's a lot of scammers. I don't want you to get scammed, so be very, very careful. But here's our Discord server for the community. It'd be great to have you join if you would like. And of course, here's other places where you can follow me or engage in conversations with me. And lastly, it'd be great to have you as a sponsor to the channel. You could look at the different levels that you can sign up for with different levels of perks. And we will have our first workshop this Saturday. We're going to go through and look at a few topics, maybe start with financials and really get good at looking at financials and analyzing financials, getting to know maybe a couple of different sets of financials, because that's really that's the information, the facts that we need to then begin to analyze the company. And getting to know a company is really well done when you get to know their financials. So we'll be kind of going through a lesson there, as well as any other topics that the attendees want to discuss on the workshop. But we're going to be having a workshop each Saturday and then an investor community call on Sundays. So all members are invited, paid members, to both those events on the weekends. And I hope that those events really help everybody improve their investing ability, improve through others' experiences and examples. So I really encourage you to become a paid member, and I'd really appreciate it. Okay, so let's get into the stock market. It is a really big day. Let's take a look at how the market is opening. I'm sure the technology is going to lead the charge as stocks go up and to the right. This month, October, could be a negative month, but the first half of the month is looking to be quite positive, and I'll take it. The NASDAQ is up 0.47, S&P is up 0.38, and the Dow is up 0.32. Russell is doing great. Small caps have been really working. All right, go small caps. I'm going to toast the small caps. I thought small caps were kind of lagging for a while, and then I looked at the chart yesterday, and I was a little surprised but impressed that they actually are keeping up with the NASDAQ. They're keeping up with the S&P. So small caps are making it happen, and let's see if they can keep these gains. Really impressive that the Russell has been really appreciating nicely. And as we look at what economic data was released today, which affects stocks. Well, first we had a retail sales report, and the retail sales report came in better than expected. Retail sales increased by 0.4%. This is month over month. So that's a very good rate of improvement, of growth. And it was previously at 0.1%. Consensus was at 0.3%. But that tells me it's the consumer's willing to spend money, and that's good. We're going in the US into the time of the year when they're really going to start spending some money. We have holidays coming. You've got starting with Halloween, right? We really celebrate Halloween. We have a lot of fun around Halloween, and there's a lot of spend around Halloween. Let's go get some costumes. Let's have a party. Let's buy candy, give away candy. Let's have, some fun. And it's kind of like, to me, the beginning of the holiday season. And then next month, we'll have Thanksgiving, where people come together, gather in the US. And I think Canada had Thanksgiving. Was it last week or this week? I could be wrong, but I think it's this week. And they celebrated their Thanksgiving. Well, we celebrate in the US Thanksgiving. I think it's the last Thursday of the month. And obviously, it's a big meal that brings people together. I really enjoy it. So there's spend around that. And there's the official, beginning of the end of year holiday buying season opens up right after Thanksgiving dinner. Even some retailers kind of jump the gun, start offering things the week of Thanksgiving, which I can understand. They want those dollars. And our friends at Amazon usually just see a huge, huge increase in retail sales. So it's beginning, it's going to begin, and it's good to see a retail sales report be in the positive, because we're going right into, that big growth rate. And in addition to that report, the unemployment came in, again, a little bit more favorable than expected. The initial jobless claims, people going in to the unemployment office and saying, I lost my job, I need to file for unemployment benefits, was lower than expected. So fewer people lost jobs. People are employed. Very good. Very good for the economy. They have jobs. They're spending money. We're seeing the bank stocks are doing really well, because they're expecting that people are going to pay back their loans, whether they took a loan on their car or took a loan to buy some discretionary items, some big ticket item, as well as, mortgages. The stocks that have been really booming are those buy now, pay later stocks, and not necessarily because they're growing really fast, but because the economy is showing that the consumer is going to be able to pay back their debts. So those companies will, it's expected, buy now, pay later companies will not have to write off as much of their debt that they have out there to consumers. So the economy's looking good. The economy's looking good. I don't know what the Fed's going to do, whether they're going to lower rates or what they're going to do. They get paid the big bucks to do that. So I'll let them do that job. And I will do mine, which is taking a look at my portfolio and trying to do the best that I can to increase the value long term for my portfolio. So coming out of the gate, technology is number one, as expected. Go technology. And I'm sure the semiconductor space is just having a day, they're having their Halloween party ahead of the game here. They are having a Halloween party on a Thursday, which isn't a bad idea. Financials are doing well. Maybe that, employment data and retail sales data is helping financials once again. Energy's up a little bit. That's good. They've been having a bad week. They need a hug. Energy stocks need a hug because oil prices went down substantially, and energy companies have really went down in value. But it's really green across the board. The only space that's kind of lagging is communication services. What gives? Communication services, I can't put my finger on why, but it's not too bad. It's down just slightly. So most things are green on the screen. It's been a green week for me. I'll take another green day. No problem with that. So let's take a look at the semiconductor space. This is where the party is really pumping. We've got TSM up 9%. Holy Toledo. And this is a massive cap company. This is the market cap as of yesterday. So you add 9% to that, and we're up in the 900 billion market cap level. They'll take the number 2 spot away from Broadcom. And then NVIDIA is up 2%. Phenomenal. Very green on the screen. So I've owned TSM. I owned it for multiple years. I sold it. After tripling my money. Thank you very much, TSM. And I did leave money on the table. Oh well, you can't get them all, and you can't squeeze all the profit from a particular investment that was possible. I was wrong in expecting that the semiconductor space was just overheated, overvalued. To this point, you know what? This is a once in a long time or lifetime event where semiconductor buildouts are just so massive that the companies in this space are just going to benefit. But, I'm going to be glad that I did invest in TSM. I did make a lot of money. Ditto with Broadcom. I owned Broadcom. I made money on Broadcom, and I probably sold it too early. And oh well, can't get them all. So these stocks continue to go up. We'll see how high they get, and we'll see how their economy operates going long term. It's just been incredible that this has become, I think, this might be the biggest industry within the technology sector. And the technology sector is full of awesome industries. You have software in there, these giants like Microsoft. And to be, the top dog within that sector is really, really impressive. So great job to the semiconductor space, and congratulations to all stockholders of these companies. Enjoy your day, enjoy your your Halloween party ahead of time. All right. So semiconductor stocks are just making it happen today. The stocks that are announcing before the market open, TSM is the biggest one. We're going to go into that, look at some details. Blackstone is a financials company that's more like a private equity, private financing company. They're doing really well. Elevance, holy smokes, they need a hug. The energy stocks and healthcare payers need a hug because their stocks down big. Marsh McLennan, these guys are kind of insurance, and I wanted to take a look at that. I'm going to look at Wipro, which is a company out of India. I'm interested in learning more about India. Here's an opportunity. Let's take a look at an Indian company. And then Nokia. Nokia, once upon a time, man, they were big. I remember owning a Nokia phone. They were early in the smartphone, paradigm, and they were very good technology. And I believe they have certain things that they do quite well. And I want to take a look at see how the company's doing. It's a smaller cap, but it might be interesting if I have time. We'll see how quickly I can get through the big names and see if I can get to some of the lower names. Of course, I want to look at members and see if they have any requests. Mike, the dividend investor guy, how are you, sir? Yep. So I appreciate that, Mike. But if there is a stock out there, please let me know. I be glad to cover it and we can go through it. But I appreciate the consideration. And it's good to see you. Thanks for joining. Shadow Guy, bond yields. I have noticed that my bond prices went up this week because I think the yields were going down, which causes bond prices to go up. And they're up today. I didn't even look at yields today because there's just so much action on semiconductor stocks. And then Elevance, I'm a stockholder. So that one was a little bit of a splash of cold water this morning. So I'll take a look at that. Thanks for the heads up on that. And we got a fan of Halloween. I love Halloween. And you like the discounts on stocks. I do too, but man, I don't know that we're getting a lot of discounts this year. We'll see. Yeah, so there is some red out there, but let's keep on tracking and see how we can make some money. All right, so let me go into TSM. TSM is an impressive company. They're out of Taiwan, and back in 1994, they decided, hey, you know what? We want to be a foundry and we want to be a substantial foundry. And they ended up being the largest foundry in the world. And they deserve a lot of credit for having that foresight of saying there's a lot of fabulous semiconductor companies like Broadcom, AMD, and there's others that even ARM. ARM does not have their own manufacturing capacity. They depend on foundries like Taiwan Semiconductor Manufacturing. And they were right. They were the outsourcer for making chips in a country that really supported this industry. And boom, they're massive now. Their market cap is not correct. If it's probably 10% higher than 833 billion. So they're probably about 910, 920 billion dollars in market cap as we speak. And they are doing quite well. Their revenues expanded, and so did their profits. So looking at their earnings release, I'm going to get down to numbers because I like numbers. They communicate very clearly to me. And you can see that this is the third quarter of 2024 that was just announced, and then to the previous year, their revenues went up substantially. Now, I'll show a little bit later that they just went through a cyclical downturn or coming out of that cyclical downturn. So that's normal for semiconductor. You have periods of boom, periods of bust, periods of boom, periods of bust. So I'll show that in a minute. But for now, that's a really impressive growth rate. And their profitability expanded. Awesome. Holy smokies. 48%. And as we look at gross profit, right? You look at on 759, and let's see what currency we're dealing with. This is in the Taiwanese currency. So I'm not going to be able to put it in dollars, but I'll put it in percentages, which is if you look at the gross profit percentage, this is around 60%. I think like 59, 58%. And I know previously in the week, we look at some industries where their gross profit is like 15%, 20%. And that's why I don't like those industries, is because, man, there's not a lot of meat left on the bone. After you pay for your prime costs, which is like materials and labor, direct labor to provide that product or service, you don't have a lot of left. And then you got to operate and administer the business as a whole. So I like businesses like this that, hey, boom, there's a lot of meat left on the bone. Once they get done with their prime costs, which is all materials related to making those semiconductors, getting them, to customers. Now, okay, we got to administer the business, but there's a lot left to get down to the bottom line as net profit and free cash flows. So that is really impressive. And that's why I liked TSM. I owned it for multiple years and was glad to own it. Now, income from operations, all this looks good. Their forecast is that they're going to do well for the next 12 months. And I can't argue with that. They cited two areas of growth. One was the mobile phone sales or smartphone sales have really picked up, as well as AI spend. So that combination is leading to this really good growth rate. Now, back to their long term, as we look at, we have they had a downturn in their revenues. You could see just slightly, but 4.5% negative revenue growth. And when we look at the quarterly, I think there is some negative quarters there. And that's what I was referring to is you're having a downturn cyclically that you're comparing to. You had revenues in the same quarter last year were down close to 11%. And now your business is picking up, which is a fact, but you're also comparing to the weakest quarter you've had in a long time. So I don't want to take any credit away from an awesome quarter, but I just wanted to know, hey, they're comparing to the weakest quarter previously. As we get to quarters that are stronger and you go forward, the growth gets a little harder because you're comparing against a larger number. But they'll have to deal with that in a quarter, and I'm sure they're going to deal with it well. So the stock is up 10.77%. The one thing that I have not been in love with when it comes to TSM is they haven't generated a ton of free cash, enough to warrant. This is a massive valuation. It's now 910, 920 billion. So in order to get there, when I originally invested in TSM, they had awesome cash flows. Let's take a look at cash flows. And it really made the investment quite simple. Man, look at those cash flows. I'm in. And as their cash flows have increased, I think and this is in the wrong currency, so it's kind of hard to put it in dollars. But last year, especially 2023, you had a dive in free cash flows. And that's where I started to think, kid, we're having problems here. Where's the free cash flow? You had negative free cash flow growth in 2021 and then 2023. So that was part of I'm going to get out of this stock and take my gain and move on. But they've had, you see how you have negative, positive, negative, positive. It's always been that they do produce free cash flows. It just hasn't been real smooth. Like when you look at Microsoft, Apple, Google, they tend to be very smooth and, up and to the right. So those are just minor kind of things that I would point out. It's an awesome company, and I think they're going to continue to be super strong. The one big, threat to them potentially, right, is they are in Taiwan, and China believes that Taiwan is a part of their country. And although it hasn't gotten overly uncomfortable to the point where you think, oh, China's going to invade Taiwan and take it over. They have done like threatening drills, like they fly their military aircraft over Taiwan's, territories. They do have their Navy kind of do drills outside of Taiwan. So they kind of bullying Taiwan to some extent. The U.S. is a ally to Taiwan, and I think so long as the U.S. stands strong against Taiwan, I don't know if that's ever going to change. And I don't know that China wants to kind of stop a good thing. Taiwan's flourishing. But that's just the reality is, you have some tension there, and we'll see how that plays out. We'll see if it just continues just to be, Taiwan is left alone and they're not, disrupted in any way by the Chinese. But it could become a big problem if all of a sudden China does say, you know what, we believe that's part of our country. We don't like the fact that the US is getting all their chips from TSM and having this advantage in AI and military advantages. So we're taking it over. We're going to start, limiting the technology that is released out of Taiwan to the US, because the US does that to China. We don't allow like NVIDIA to release its most modern and capable technology to the Chinese. We don't allow our technology companies to basically sell to our adversaries globally. So that's a story that may or may not happen. I would just put it out there that say that's just a reality. They're in Taiwan. Taiwan is a disputed territory. We'll see how that plays out. I'm not a geopolitical scientist. I just kind of point to obvious realities. All right, so we went over TSM, and let's kind of go. Let's keep rolling. Got through TSM. All right, Blackstone. Blackstone's up 5%. And these guys are an alternative asset company, and they specialize in real estate, private equity, hedge fund solutions, and credit in secondary funds to funds markets. This is a pretty substantial market cap company, 122 billion. And I notice Blackstone quite often. They're usually in some pretty interesting deals. They have about $9.86 billion of revenue, really high PE, 57.83 PE in the current year. Forward PE 31. That's a little high. It's a little expensive. Dividend it's okay, 2%, not bad. Analysts believe, based on their price targets, that is priced a little too high. It's priced 14.6% too high. If we look at their fundamentals, they had really good growth in the trailing 12 months, really good growth. They went from 7.6 up to 11. They did have a couple bad years of operations and performance. You can see that their numbers are quite erratic, right? You have, when the market's booming and there needs to be a lot of like deal making, they had a really good year in 2021. And then things slowed down. Now things are picking up. The one thing I would say is that, there haven't been a lot of IPOs. And I think that Blackstone's probably in a good spot where a lot of these privately held companies that are not public, that need sources of capital and sources to borrow from, Blackstone's probably going to be a really good choice. Real estate's really expensive. And I'm not sure if there's a lot of deal making to be made in real estate. I'm also a real estate investor. And from a residential real estate perspective in Southern California, I'm not buying any real estate. It just doesn't make any economic sense. When you look at buying a property and the prospects of that property losing value, is just too much of a risk for me to take. I'm just going to hold the real estate investments that I have. I've got great, appreciation in those assets, and I've made a lot of money on real estate. I'm just going to keep my portfolio where it's at. I did sell one property in 2022. It was very good, unlocking of capital. I was sitting on a very, very big gain. So took that and put it in the stock market as well as bonds and a little bit of crypto. So not sure where real estate's going to go, but Blackstone, I think, is doing quite well. And I think when it comes to funding, maybe companies that are still private, Blackstone's probably going to be a player. I can't argue with this being a quality business. I'm just not big on buying these types of companies for me because of the erratic performance. I like smooth performance. And right now I'm in, a good number of financial services companies, but I'd like to see a little bit more smooth performance as opposed to up and down. Because these stocks, I get into them, and then the following year they really crash and burn. And I'd rather have smooth and to the right. I want good performing stocks. Instead of Blackstone, I'll buy more Meta. I'll buy more Google Alphabet. I'll buy more Uber, because those are showing that they are continuing to grow their businesses. They continue to just generate more value. So that's Blackstone. Hopefully some of you are Blackstone stockholders and made a nice gain today. Congratulations. All right, now for the bad news. Elevance, holy smokes, down 14%. Oh, Man, get me a violin. I got to start playing a violin for Elevance Health. Elevance is a healthcare insurance company. They basically, you through your employer or individually, you can buy healthcare insurance from Elevance, and they have different brands. So you may not recognize the Elevance name, but they have three or four different names that you would buy insurance, and Elevance is the overall company. And they are a solid company. I like healthcare insurance companies because they tend to be and historically have been just very consistent appreciators. I owned United Healthcare for years, did great with it, switched horses over to Elevance, and we're having a rough year. We're having a rough year. Expenses are up for these health insurance companies, especially around Medicaid. That was the problem area for Elevance. Now, I saw this a little bit, somewhat same sector, different, actually different sector, but similar type of business is the casualty insurance. Casualty insurance, which is like Allstate, Progressive, those types of companies, they had a horrible end of 2022, 2023 because the premiums were not right. They were losing money. The cars and homes got so darn expensive that when claims came in, they were much more expensive than how they originally wrote the policies to support. Now, they got the pricing right, long story short, and casualty insurance companies have flourished. One of the best performers over the last 12 months within financial services. And I think we're dealing with that with health insurance companies where the pricing's not right because the costs are much higher. Now, this is a regulated industry, so they partner with the government and then they go and show the data. Hey, you know, the health insurance costs are higher and it's really squeezing us out of that market. And Elevance is not forced to provide health insurance to especially areas where they're just going to lose a lot of money. So the government, negotiates with them and they allow them to raise their rates, their premiums. And I think that's going to happen. It's going to sort itself out eventually. And then you're probably going to see a good year in 2025, 2026. If it follows what I saw in casualty insurance. For now, this one's going to really be a tough day for me personally because Elevance is a stock I own. I own about $60,000 of Elevance. So I'm going to be a little lighter in the wallet by a substantial amount. Thank God I have a diversified portfolio where some of my other stocks are going to do quite well. And I'm probably going to be in the green by some margin today. I'll see a little later. So Elevance saw that its revenues actually expanded. So I'm going to get down to the numbers. I like the numbers versus the words. So when we look at the most recent quarter that was closed, which is September 30th, comparing it to the previous year, it went up in revenue. And sequentially, it also went up from the previous quarter. So operating revenues is not the problem. The problem is that the cost, especially around Medicaid, went up in higher proportion or faster than the revenue growth. And you could see that even though the revenue is higher, the operating gain was lower. So that's what the market's freaking out about. It's like, oh man, you're not as profitable as we expected. And that's a good reason to be selling off the stock, just calling the balls and the strikes. The one thing I would say, and here's some of the brands that they have: Anthem, WellPoint. These might be companies that you get your health insurance from. And here's another one, Carelon or Carelon. They're going to pay a dividend. Their dividend is not incredibly high. And then looking at the one thing I looked at was their statement of free cash flows, and the statement of free cash flows came in as expected. So when I look at Elevance Health, and here's my valuation on Elevance Health, I updated it based on the numbers from their financials that were just released. Their cash went up, which is good. Debt was about the same, went down a little bit, but their free cash flows are on the right path. They're on the path that I expect. They're actually going to be a little higher, but I'm going to play it safe and just be conservative. And really, the growth rates that I'm using on free cash flow for Elevance are super conservative. It's like they're just going to keep growing a little bit. And based on those numbers, I still think Elevance is really discounted substantially. And over time, I think the market will recognize that. So I'm keeping Elevance and I'm going to buy more shares. This is a stock like I've owned either United Healthcare or Elevance for the last 10 years. I'm not going to change because it's just a space that I want to be a part of. It's a space that continues to appreciate over time, becomes super important. These are companies that are not going to be replaced. They're just going to continue to get larger, which is the fact that Elevance continues to expand their revenue. So I'm good with Elevance and I'm going to be buying more shares. It is a tough day, but I think if you look at, that decrease in stock price, it could be a really good opportunity. I'll probably buy about $1,000 of Elevance today, which is roughly 2 shares, and see how the stock recovers over the coming weeks, especially if we start getting, like right now, we are seeing high flying stocks like semiconductors just really grow. Elevance is a safe stock. As soon as we get more fearful knowledge or details, like we heard that the economy is doing quite well, the consumers buying stuff and they have plenty of jobs. Well, that means that the safe stocks are not working today, but the safe stocks like Elevance will work if there's any kind of tension, fear put into the market. So that's my review of Elevance. It's a tough day, one single day, and we move on. So, hey, Bobby, it's good to see you. How are you? Good to see you. So I did hear about Expedia. Expedia is the stock's going up, and let me see if I could take a look at it quite quickly. And I heard the story was that Uber is thinking about buying Expedia. I do not like that idea. It's up 4.86%. Expedia is a travel stock. It's really worked for the past year. But for the past 5 years, you could see that it didn't quite work so well. The things I don't like about Expedia is they don't have like great barriers of entry, great moats. They're a travel site and they are basically reselling airline tickets, hotels, and so forth. And they take a margin on top of that, but their margins are not very, very large. Uber, on the other hand, that does have a very strong barrier of entry. It's their network, and their network's the biggest one. I'm an Uber stockholder. I would not want them to acquire Expedia because this is a lot of revenue that is going to shrink your margins. I don't like it. Um, Expedia is just another travel site, in my opinion. Booking is actually out operating Expedia, and Booking is a lot like them. Booking is trying to make themselves look like a travel site as well as Airbnb. But I own the real McCoy, which is Airbnb. I own Uber. Those are pure play disruptor companies. They are not, they don't have one foot in the past and one foot in the future like Booking. And in case of Expedia, they have both feet in the past. I wouldn't want Expedia to be a part of Uber. Expedia stock is appreciating, and this stock may work, for some additional time because the travel space has seen a very good year. And again, the consumer in the US is doing quite well. They're probably going to spend money on travel as well. But this is just not a really powerful company. These guys have been around for a long time and look at their market cap, 20 billion. And if you look at Uber's, I think, above 100 billion. If you look at Airbnb, much more valuable because those are true disruptor companies. So that's my opinion on Expedia. I hope it doesn't happen. I'm an Uber stockholder. It wouldn't be the end of the world for me, but I would just be a little confused. And one of the reasons why the stories out there is the current CEO of Uber was previously on the Expedia board. So the fact that the current Uber CEO is on the board gets, I guess, the press and people thinking, well, there's discussions of maybe Uber taking Expedia on. I could see how people are kind of following the dots and seeing that that could be the story. I just hope it doesn't happen. All right, Marsh& McLellan. This company announced, and this is a professional services company, provides advice and solutions to clients around risk strategy. And they do risk and insurance services, consulting services. So I think these guys are more of insurance for big businesses that are like, hey, we are like, you know, a unique business like Uber, as an example. They have to have a lot of insurance because they have millions of drivers driving around and giving people a ride. And if they were to get in an accident, Uber's on the hook, and attorneys are making a living out of suing passengers when an Uber driver gets in a collision. Obviously, Uber will get rid of bad drivers. If they have a bad driving record, you're out. If you have an accident or two, you're out. If it's your fault, you're out. But maybe it wasn't the Uber driver's fault. They're just stationary. They have a passenger in the back, and some bad driver wrecked into them. Well, that passenger could still sue Uber. That whole policy is probably something Marsh& McLellan can help them with, because it's a very unique policy. It's not like you go to Progressive Insurance and say, hey, I want to insure, a million drivers. They'll be like, no, I can't handle that. But Marsh & McLellan will have the people, the experience to be able to say, okay, this is what we can do. They'll create a very unique policy or very unique situation for a company like Uber. That's what their business is about. And they also do risk management, meaning if a business looks forward and they're like, hey, I've got a couple of risks and I want my business to be taken out by one of these bad events to happen, they'll help with that. So that's what the company does. The company for the past year has been up 19.6%. Nice smooth chart. Very good. Pay a little dividend. Not bad. They have $112 billion market cap. That's a pretty good market cap. Over the 5-year, real smooth chart. Look at that beautiful chart. Very smooth. Let's look at their data. So this is a quality company. I've known of this company for a long time and understand what they do. Their growth has been really consistent. I think they get to renegotiate with clients, and their clients have few choices, right? It's like I was explaining the Uber situation. It's not like Uber can go online and shop their insurance. No, they need a trusted partner that's going to be there when, situations happen, and there has to be some coverage. So they keep renegotiating with their clients, and it keeps expanding their revenue. So that's really interesting that they're really, really consistent company. Having said that, let me do a quick valuation on them. So good revenue growth. From a cash flow perspective, how do they cash flow? So they cash flow nicely. You can see that they've grown. In 2019, they had free cash flows of 1.94 billion, but over time they've grown that, and now they're at like 3.7 billion. Very nice growth. And this being a good company that's shown growth, I could maybe get to 80, 90 billion dollars of valuation looking at their cash flows based on the rate of return that I want. And this stock's a little too expensive. It's probably about 20% too expensive based on free cash flows. Analysts will use price targets, but even they say that the stock is priced a little too high by 5%. And they base this mostly on earnings per share. So this one is a quality company. It's a little expensive. And the stock has sold off a few times. I would want to wait until this quality business is well discounted. And it hasn't really offered that up, which is impressive. It's like this company holds its revenues in good times and bad. And even in 2022, this must have been a rock star stock. Actually, it was kind of flat in 2022, which is a lot better than a lot of stocks in 2022. A lot of stocks lost a lot of value. So that's Marsh & McLellan getting it done. Today, they're up only a slight bit. So their earnings were a little bit boring, but we came in as expected. So investors are not overly excited, but they're not selling it off as well. So That's Marsh McClelland. All right. So I think this one might be the last company I review, which is Wipro. And Wipro Limited operates as an information technology consulting business and process worldwide. And this company is, I believe it's out of India. And I am familiar with the business. They're an Indian company. They provide a lot of technology based services. So consulting, cybersecurity, that kind of thing. And that's a big, big market for India because they have a lot of educated people and they really focus on technology. They have a lot of engineers, computer scientists, and they really provide a lot of value to the world. This is a $33 billion market cap company. The stock's down. So it's down 2.34%. Revenue is 10 billion. PE is 24. Forward P is 23. Now, this is an industry that I'm not in love with because it's professional services tend to be things that you have to constantly, your revenues are not like reoccurring revenues that a software company would have, like a subscription. Some of these are project based, so they start and end, and then you have to find another project to sell to replace that project. In some cases, they perform managed services, which is more consistent, but those managed services tend to be at lower margins because there's a lot of competition for that type of business. This is an industry that I have a lot of familiarity with. I've worked in this industry for some time. So the company is a quality company. I know their name just by participating in the industry. This is in the Indian currency. I believe that it's a rupee. And they've seen good growth coming out of COVID, but their growth has really stalled and it actually has been going down. So back to this is project-based work, and maybe companies got all the projects they needed to complete in 2022, 2023, and now there's a lack of new projects and organic spend out of the market, and that's what they're dealing with. We look at their stock price. Their stock price has been good for 1 year, 27.8, and for the 5 year, 65. Not bad. Coming when they were in their heyday of growth, they really pumped up their price up to about $9.91. But since then, it's really fallen. So this one here might be an interesting one. I'm gonna take a closer look at it, but I'm gonna do it on my own because I think I'll take too much time getting to their financials and then doing all the currency translations. It'll be a lot of time, a lot of dead space. So this is an interesting business. It being down is somewhat of kind of it makes it a little bit of an opportunity for me. So I take a closer look and see what I find. Hey, thanks for checking in, Mike, and good luck today. All right, so let's take a look at where the market is at now. We'll look at which sectors are moving. Market's kind of settling down. We got the Russell in the red a little bit. We got the NASDAQ kind of calming down. Oh, that's interesting. I thought it would have been a boom day. Based on the TSM report, I thought, man, today's going to be a super green day. But let's take a look at sectors. So sectors are beginning to kind of, tell us what's going on. It's 50 minutes after the market opened. Real estate is down. Communication services are down. Consumer discretionary. Now, later today, Netflix is going to announce after the market closes, and that's communication services. And Netflix has just been such a successful company. I've owned this stock. I've owned the stock for years, and I would buy it, make money, sell it, come back, buy it. And most recently, I did really well because if you recall, like 2 years ago, the stock just really sold off for just dumb reasons. And I bought it and did really well, sold it, literally doubled my money in a year. Just felt like the stock got a little too expensive. And there is a lot of direct competition to Netflix. So I sold out of it. But now the stock's really expensive. So we'll see where see how it announces later today. I'll cover it in the PM live stream. If you want to hear my comments on Netflix, tune in for that. Consumer discretionary is down, which is a little bit of a surprise. The consumer's spending money. They have jobs. So what's going on? Healthcare is not down as much as I thought it would be, but here we are. Technology, of course, is just crushing it. Why is energy up? Are oil prices higher? Yeah, oil prices are up a little bit. So oil prices are up, energy companies are up. So that's what's happening. Financials are up, materials are pretty much even. All right, let's take a look at where semis are. Semiconductors are still just leading the charge. TSM's actually doing better, 11.5. Wow, incredible. So they will be about 950 billion in market cap, looking to see if they can get to 1 trillion. We will see if they make it. And let's see, what else could I show before we? I think that's a good place to kind of stop. All right, cool. So that is the live stream this morning. I don't see any more requests from members. So I will be back this evening, 5:30 Eastern, taking a look at principally Netflix. But what we could look at is the earnings calendar. Let's take a look at that and show which companies are going to announce. So we just had TSM announce, Netflix is going to announce, Intuitive Surgical is going to announce, Crown Holdings, I'm not sure what they do. And then Western Alliance, I think this is a bank, a couple of banks, smaller banks, and the WD-40, which is kind of a consumer staple company, is going to announce. The big announcement is going to be Netflix, right? That one's going to draw a lot of attention. There'll be a couple little stocks there to take a look at. So that's what's ahead. And again, just if you'd like to be a more active participant on the live streams, you want to participate directly on the workshops, and the workshops are on a Google Meets call. So we talk, we don't have this type of forum where I'm the only one talking. And as well as the investor call on Sundays, sign up for the advanced investor program and you could attend those calls. So please consider that. More details are in the description of the live stream. So with that, everybody, enjoy your day, enjoy your Thursday. Let's see where the stock market goes. It's interesting that the stock market has settled down and is not booming. I thought today would be a boom day with the news out of TSM, but it's really isolated to technology. And it looks like other industries are weighing down the market overall. Anyway, good luck today with your investments, and thank you for tuning in.